For a number of years, LNG was considered one of the saviors of the clean power generation sector. It was relatively clean, it was plentiful, and most importantly, it was relatively cheap. But all that changed in March this year with the Japanese earthquake and tsunami that saw LNG prices rising dramatically. I'm joined now by Sid Bambawale. He's the director of LNG at Citi's Commodities Group. Sid, thank you very much for joining us. Let me start by asking you, they're at 17 this year. Are they going to stay at that levels next year?
Thanks, Arnold. Yes, you're right. Spot LNG prices are at 17, and they've actually moved up quite sharply from about 10 before the earthquake. A lot of that run up in prices was down to demand from gas-fired generation, LNG generation in Japan to make up for the nuclear utilization rates. LNG generation is actually running quite high at the moment, nearly at sort of full capacity levels. And next year we see that there will be certain more supply, LNG supply coming into the market out of Australia, Africa, and Algeria as well. So, barring any sort of big moves in the market, it looks more likely that things will begin to get more balanced next year. Even if
Japan doesn't restart all its nuclear facilities?
Well, currently nuclear utilizations in Japan are running at about 20%, which is quite low. The intended sort of maintenance cycles means by the end of the Japanese fiscal year, they'll probably be down to close to zero, and then we'll begin to restart. So I think the market sort of considers into fact that there will be a sort of a decline in nuclear utilizations from these levels as well.
So where are prices going to be then next year?
So currently the price is at about over $17 now for the rest of the year. There is a chance, particularly in winter, which is the peak demand season in North Asia, that there could be still some strengthening in prices through first quarter. And then depending on the nuclear situation, depending on the broader demand situation, prices later next year could potentially come down as markets get more balanced.
Okay. Tell us about the impact of these high prices, on the growth of the spot market here.
Sure. So the impact in certain markets has been less so and more felt in other markets. So the impact in North Asian markets, which really have no alternative to LNG, has been less felt. These are sort of more inelastic markets with high affordability. But there are other markets, particularly in Asia, the emerging set of markets like India and China, Southeast Asia, including Thailand, Malaysia, Singapore, that will join, where the affordability is not as high as North Asian markets. And there we've seen, particularly as prices went beyond $15, $16 level, there's a decline in their activity in the spot purchasing market.
So how does this all play into Singapore's plans to become an LNG trading hub, what you just mentioned?
So Singapore's plans are actually quite exciting, and for us at Citigroup, we look at the experience in other commodities, particularly as we trade them out of Singapore, and replicating that experience in LNG. It's important in Singapore because Singapore is going to have a storage facility for LNG as well, and have the ability to not just bring cargoes into Singapore, but potentially trade them out of Singapore into the region as well. And that's an interesting sort of concept that could foster liquidity in the market.
One interesting development as well, I'm not sure if it's really significant, is the fact that U.S. shale gas exports have now been allowed into the region and elsewhere. How do you see this playing out also?
So the announcement by Cheniere Energy together with BG for 3.5 million tons of 20-year supply out of the U.S. markets is actually quite an important one, we think. It's sort of a first but small step to bringing gas markets interlinked, particularly out of North America and into Asia. We see this announcement being followed potentially by other projects as well, as people sort of race to capture the very wide arbitrage difference right now between prices in North America, which is at $4 level, and prices in Asia, which are 4 times that. So that's potentially going to carry on, but the scale of it is still quite small too at this stage.
Okay, Sid Bambawale, Director of LNG at Citi's Commodities Group. I'm Arnold Gay at the Singapore International Energy Week for Reuters.